Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these free mentoring roundtables week after week after week. We started way back in 2008, September, as an experiment, whether online mentoring was going to be effective. And it was. So now it's been a long time that we've been doing it. This is our 524th session. Over 150,000 people have participated in these sessions. We've pretty much been doing a weekly roundtable for years and years. Maybe we take a few breaks during the year, but out of the 52 weeks, we are here with a group of entrepreneurs at least 45 to 48 weeks of the year. So you'll find every single recording of the roundtables on our YouTube channel, 1M1M Roundtables. The hashtag for today on Twitter is hashtag 1M1M. You can join us on Twitter at 1Mby1M and at Romana. We publish a lot of interesting content. This is a roundtable, not a broadcast, so we do want you to participate. I will put the slide back up a little bit later when we are ready for call-ins. First, we have some scheduled programming. We're going to speak with Aditya Mehta from Art&Found, Making Art Accessible. Aditya, please unmute your line and tell us what you're doing. I thought you had a video on.
Yep, my video and audio is both on.
Perfect. Let's go.
Glad.
You are based in Mumbai?
Yes, I'm based in Mumbai.
All right.
Right.
As you know, I'm a huge art aficionado, so I'm all ears to hear what you're doing.
Brilliant, brilliant. That's a great start. You're in for a treat. Hi, everyone. Hi, my name is Aditya Mehta, and I'm the founder CEO of Art&Found. We're making art accessible, and let me show you how. Next slide, please. Art&Found is a leading digital art platform in India that serves South Asian artists, individual buyers worldwide, and global brands. We're curating only the best of digital art from South Asia, being the go-to platform for global consumers and brands like WeWork, Levi's, and Starbucks. We got 1,000+ artworks, 500+ artists, more than 1,000 buyers, and at least 10 brands that we work with. Next slide, please. We're uniquely positioned in a post-COVID world to launch NFTs in India and South Asia with a demographic overlap of user base, NFT early adopters, and the opportunity to be at the forefront of curated digital art. Now, we all know what the market size for NFTs is. It's currently at 380 million, which is an increase of 300% from previous year. There's about at least 150,000 artworks sold on the top 6 platforms today in the digital art NFT sphere. Art&Found services B2C and B2B as independent yet synergistic revenue streams. We're positioned in that sweet spot between artists, consumers, and brands. Interestingly, the last bit where at least 60 to 70% of our revenues come in. Next slide.
So just to clarify, you are positioning as digital art. This is not physical art, it's all digital art.
Correct.
Digital art that is uniquely anchored in a non-fungible token. That's what your positioning is.
Correct.
Okay.
Now, here's an overview of our D2C side of the business. Curated platform by South Asian artists for the global consumer and brands is what Art&Found is. About 65% of our buyers are millennials, with the rest 35% Gen X. Our curation, which is our key value proposition from day zero, has always targeted global millennials and Gen Z. Our existing customer base is spread across 10 plus countries. The majority are Indian origin, and we have a very strong India diaspora appeal. We've also got some of the top galleries in India, which is also an ever-growing list as we're speaking to them and collaborating with them, giving them a platform to access a global audience and leverage technology. For them, what we're solving for is obviously detecting fakes, which is a huge problem in the industry, and also be able to track ownership and resale value. And of course, financial transparency, bringing in a level playing field across the art industry and creators economy in general. On the right side, you'll see a map of our customer base, of course, active in India, but also, across US, Canada, and down all the way south, Australia. And Europe, we've got a good presence there as well. We worked with some of the world-class brands like WeWork, Levi's, Starbucks, Nike, also working very closely with their not only India team, but also Asia Pac team. We also have very interesting new unicorns, or almost unicorns like Cred, who are fintech companies, but with a heavy technology background, who are working with us. And thus, due to my background, I was a senior art director at Ogilvy in Mumbai. We're bringing in agencies like Ogilvy as partners, so we can leverage their brands like Vodafone, Unilever, Tata Sky, and so on, and also Mondelez.
And what is the value proposition here? They're buying digital art from you and displaying in their offices in India or Asia, wherever? Is that what's going on?
No, we're actually collaborating with brands to create assets, to create merch. It could be to create a special limited edition collection. And I'd love to show you use cases of it, which are further down in my slides after the appendix.
Okay.
So currently, I'm just going to show you the process that's there. We'll take a live example of a project we're doing with Starbucks, where Suzanne, an illustrator from Sydney, is creating an artwork which is going to be on mugs for Starbucks, which are going to be launched across stores in India. Mm-hmm. So, she's got to put a design fee to it, and then of course, create the artwork that goes on the mug. There's legal document involved. There is, the man hours involved. You've got to understand what the legal document is. Then, of course, you're talking about a high-res file that's going to go, and then the financial completion of the entire project, which finally has to go to Smriti, who's the marketing head at Starbucks. Now, with NFTs, what we're doing is blockchain is bridging this entire process. We're reducing costs by 95%, including legal, contracts, billable man hours. We're increasing speed and significantly reducing the margin of error. And an interesting point is also we're getting measurable artist data, metrics, and sales. Now, think of an artist like an athlete, right? Today, athletes have metrics, they have data, and that's why there's higher value on them. Similarly, for artists, we're going to create measurable data. It's going to be much easier to do so. Plus, creators can track percentage of revenues as artworks are further on sold, merchandise is further on sold with their artworks on it. So overall, what we're doing is we're building a transparent economic relationship between artists and brands, as opposed to just a one-time sale.
Okay.
Next slide. We'll talk about digital art NFTs as an investment. With its limited supply and scarcity, it is one of the most inflationary asset classes. On the right, you can see a graph that's a comparison. It protects against inflation. The returns beat inflation. And it's valued in and purchased against as cryptocurrencies, which can be converted into fiat money. Next slide, please.
How big is the art NFT market?
So, I mean, we're talking about the first graph that you saw. It's really picked up from last year. It's about 300% increase from last year, and currently at 380 million plus in sales. And this is just the
and
top.
That's all digital art, or it's digital and physical?
This is all digital art.
Digital, okay, got it. All right, keep going.
Now let's look at Asia as an emerging market for digital art NFTs, because that's where Art&Found is positioning itself as a player to enter into the space. We're looking at young collectors in the 30s and 40s with big spending power as budding patrons of art. They have a strong desire to invest in tangible assets as alternative opportunities, and art is interestingly one of those assets that they can invest in. There's a huge inclination towards investing in new media, pop culture, and art by ownerships of digital assets. And that's what NFTs is giving a chance for them to do so. And we're also seeing an increasing trend to accept payments in crypto for work, which enables them to invest further in these assets quite easily. We're talking about the customer profile of entrepreneurs, investment and hedge fund managers who are investing in purely virtual assets like NFTs. And it's not just art. I mean, we're talking about what NBA Top Shots has, for example, baseball cards or moments, and even music and so on. So we're positioning ourselves right in this very interesting space between community as our strongest economic moat of artists, collectors, demographics and assets of digital art as investments, with the demographic of South Asia specifically, and beating the inflation in emerging markets like India and Asia in general. Here's just a look at our metrics and milestones in the last 12 months. Of course, in 8 to 9 months of COVID lockdown in India, closed logistics and operations for a print-on-demand model that we currently have for our digital art. But what we did is we really ramped up on engagement and building internally. We added about 150 plus artists, 170, sorry, about 800 plus new artworks. Our MAU increased by 728%. New users to the website increased by 791%. And our customers base expanded to 10 plus countries. I'll just give you an average order value and largest transaction across D2C, B2B, and brands. So D2C, our average order value is about $200 plus, and the largest transaction we had was $2,000 plus. The B2B was about 1,300 average order value, and largest transaction was more than 11,000. For brands, the average order value is almost $6,000, and our largest transaction was $34,000. We also got covered extensively in the media. In fact, the Hindu, which is a popular daily here in India, covered Art&Found's role in leading unconventional brand collaborations in November 2020. And there were also about 10 publications like Elle that covered our projects during COVID.
Aditya, how many transactions have you had?
No, are you saying NFTs specifically?
No, you're saying that average order value and your largest transaction. So how many orders, how many transactions have you had?
Monthly?
Or total?
Oh, we've been in business since October 2016. So,
okay, monthly?
We've got monthly, we do about 50 to 60 or more sometimes transactions. But this is
Okay.
cumulative data.
All right. So explain to me these three categories that you're presenting here. So in the D2C category, people are buying a piece of digital art and then doing what with it? Is it just as an investment that is a tradable, cryptocurrency investment, an alternative form of cryptocurrency investment, or are people displaying it somewhere and actually using it in their environment? What is the use case or usage model?
So the current use case model is the print on demand model. So what they're buying is the physical piece of the digital artwork.
Physical print of the digital artwork.
Correct.
I see. And the same applies for B2B and brands?
The same applies to B2B. For brands, we're talking about, as I said, it could be art on merchandise. It could be limited edition product line, but it's still digital art.
So in the case of B2B, is it one print that you're charging $1,300 average for? No.
No, we're talking about the order value, which could include about, let's say, 40, 50 artworks or even more.
And the same with D2C, it's multiple artworks.
Yeah, D2C also could be multiple artworks, yes.
I see, got it. So the value, the usage model is people are finding digital art that they like, and what they're really buying is the exclusive rights to that piece of digital art, but what the format in which they're consuming it is as a physical print that they put up somewhere in their environment. That's the model.
Yes.
Got it. And what about brands? What's happening with the brands?
So with brands, we're doing art which can go as a limited edition collection. It could be merchandise. I'll show you examples of what exactly we're doing with brands.
You will show examples, okay?
I'll show case studies, yes. So just speaking of the business model, the D2C, we work on a commission model. So the idea would be to apply the same take platform earning fees, 15% on primary sales, which is anything transacted on the Art&Found platform, and 3% secondary sales, which are further on resales of the artworks along the blockchain. B2B, we take a margin on the curation features, but ranging from 20% minimum to at least 50% or sometimes even higher, which is a creative or a collaboration fee. And then, of course, on actual merch and drops and assets, it's the same 15% that applies on primary sales and 3% on secondary sales. So let's say you do something with the brand.
Who does the printing?
Sorry?
Who does the printing?
Oh, we do the printing.
You do the printing, okay.
We take care of the production, yes. So here's a competitive analysis against the platforms like SuperRare, Makerspace, Async, Known Origin, Nifty Gateway, and Rarible. So we're positioning ourselves as highly curated platform, which we feel is lacking today. Even though we feel there is a sense of SuperRare or Async or Nifty Gateway being curated, we know how curation plays a key role, and it's also key pain point, I would say, that's discussed even today amongst artists and collectors on social media apps like Clubhouse and Discord and Twitter. So we're sticking to that as our value proposition, which has been from day zero. Of course, we are for artists, so is everyone, but we're also for artists and galleries, which opens up a much wider consumer base for us and a higher price point. Plus, we're for brands as well, which we feel sorry, not field, which we know only Nifty Gateway is the one that comes close to enabling that for brands as well. So we've got that added advantage where we're curating a platform that's for artists, galleries, consumers, of course, and brands. Plus, we're going to be accepting crypto and fiat currency transactions.
Now, what is your business model with galleries?
Our business model, galleries, is the same thing where we take commission on sale. Galleries have basically skipped the entire e-commerce model enabling technology, and they need a technology platform that enables blockchain for them. As we've seen, Sotheby's and Christie's apply, their artworks curated on platforms like Nifty Gateway and Maker's Place. There's a huge need for Indian galleries and Asian galleries to leverage a platform that's already building technology that can enable blockchain for them to be able to reach out to their consumers. We're already in talks with galleries like Tao, Tark, Chatterjee and Lal, and 079 Stories. And we are getting a lot of demand from more galleries who want to be in on this, and also artist collectors.
Okay. Now, these companies that you're showing as comparables or competitors, are they all digital crypto, or are they physical art galleries? The Super Rare is not a digital crypto thing, right?
Super Rare is digital crypto.
It is?
Yeah, all of them are digital crypto.
They're all digital and crypto. And OpenSea is also digital and crypto?
Absolutely, yes.
Okay. So that's your comparable. You're basically modeling yourself around OpenSea. How long has OpenSea been around?
OpenSea has been around for a couple of years now. So has Super Rare, but they've only recently seen the spike as cryptocurrency in general has picked up, and also NFTs. I mean, we've been working on NFTs, and in India nobody knew about it in around around, I'd say, mid-November is when me and a very close artist who I have on board started, understanding this space and getting into it. Back then, nobody had heard about it. The sales weren't even, crossing any numbers. But these these platforms have been around a couple of years.
Okay. All right.
So here's a look at our financials. In year 2 is when we saw the tremendous growth of 3x, crossing about 200K, which is about the 1.5 CR mark in Indian currency, in Indian rupee. And we've had a good, a bit positive growth. And last year, we managed a turnover of 150,000 plus, operating in a very lean model as 8 to 9 months of COVID lockdown in India closed logistics and operations for a print-on-demand model. We ramped up where our cash cows are, which is essentially on the brand side, and did very interesting collaborations with Levi's, Starbucks, and we're also doing something with Nike. And I'll show you case studies of those.
You haven't told me what you do with the brands yet, though.
Sorry, maybe I need to move the slides higher. I'm so sorry. Yeah. So, yeah, sorry, previous slide. So we've raised an angel round of 110K in 2017, and we're looking at raising a 1.5 million in seed. The use of funds would be mainly for engineering key hires and product extending the marketplace to facilitate NFT transactions, and develop and design the ERC 721 smart contract. the milestones, Q1 and Q2 is essentially when we're looking at 6 months, which is a tight timeline, but doable, very doable to actually launch the private marketplace developed for NFT transactions, and also the first 100 NFTs transacted. In Q3, we're looking at 500 plus NFTs transacted and fiat currency transactions supported, and the public launch. And by Q4, launch the ERC 1155 smart contract to facilitate high volume transactions of about 1,000 plus NFTs transacted.
So I have one comment on this slide that you have on here. See, VCs are looking to go from 0 to 100 million in 5 to 7 years.
Right.
So if you're showing a 5-year growth path to $18 million, $18, $20 million, this is not exciting for VCs.
Got it.
So you're gonna need to worry about that.
Okay.
And this is not the kind of thing where, there is a category of investors who have emerged, who are willing to do, very capital efficient investments that would find an early exit.
Yeah.
But that happens more in the B2B software category, where there's a bunch of acquirers, there are tuck-in acquisitions that people do at sub 50 million valuations. And, let's say you put in somewhere between 1, 2, 3, maybe even $5 million and sell the company for less than $50 million within a 2 to 3 year frame. This is happening. There's a whole category of investors who are pursuing that line of thought. But you're doing kind of like a B2C marketplace, and that kind of transaction is not possible in this marketplace. The only thing that you can do with a venture like this, the only exit you can have at the venture like this is a public, going public kind of deal. So there, if you're going in if it takes you 5 years to get to 20 million, the VCs will tell you is that this just doesn't meet our growth velocity requirements.
Yep.
So.
Okay.
So if you can, this is why it's important. What you're saying is that your brand business is where you have higher velocity, higher ticket size, and potentially higher growth path, faster growth path.
Yeah.
So I don't yet understand that business.
Okay.
So.
Okay, maybe
so even from a pitch point of view, I would say that if this is what you want to do, then you should try to put that brand business in focus.
Got it.
And build your pitch around that business. But considering that I don't understand that business yet, it's hard for me to advise you. So hey, help me understand the brand business.
Okay, understood. Probably better idea to actually move these slides up higher when I'm talking about the brand models. So if you can go back a slide. Right, so this is how we're bringing the business model into the present and beyond. So I'll give you an example of what we've done with Levi's. To celebrate the birthday of the blue jean, we curated India's most sought after and influencer artists to use the Levi's denim jeans and jackets as a medium for self-expression. And this was a first of a kind collaboration and project for Levi's India, where we curated artists who did digital art, which was licensed as artworks for Levi's to use on their t-shirts and also denim jeans, the 501 Classic, and also their trucker jackets. And this is, we did this back to back 2 years, and we were going to do it in 2020 as well. But of course, due to COVID, we couldn't. But essentially, what this means is that we're curating artists who are creating specific artworks, which are licensed only for Levi's to use globally. And as you can see,
and what is the business model of such a deal? Who gets what how much does the artist get? How much is the brand paying, and what are you getting?
So the artist gets a design fee, and then Art&Found takes a curation fee on the entire project.
I see. And the average transaction size you said is about 4,000 something on that one?
Well, a project like this could go into like a 35,000 plus as well.
Okay. So these are kind of services projects that you have to do case by case, is what you're saying.
Right. So because we built a repository of artists, brands wanted in, and this is when we started doing these very interesting matching the right artist to the brand, which is really picking up as a space for brands to leverage art for their products. So if you can go to the next slide, I'll show you what we're doing. Yeah, the next slide, please. Next slide. Next slide. Yeah, next one. So this one, for example, for International Women's Day, we commissioned one of the top artists who's got about almost 100K followers on Insta, who defines the rules of South Asian culture and connects deeply with consumers worldwide. We got to create a collection of art that now goes on T-shirts for Levi's to be, sold worldwide. And Levi's owns the rights to these artworks. So the artist gets paid a huge fee, and then curation fee is what Art&Found takes. We basically facilitate and we bridge that between the artist and brand. If you go to the next slide. Yeah, sorry, you had a question.
No, I had a comment actually. I think the question you're going to get from investors is that is this brand business something that is scalable and repeatable, or is it a case-by-case thing? And you have to address that this is a scalable business, and then you can do very large transactions where you're making significant amounts of money, but it's also not all done by hand. It's got scalability in it, repeatability and scalability in it. So that's your pitch, in fact, will need to be that.
Got it.
If you want to raise money, that needs to be your pitch. All the rest is great, but that's not what you're financing. So
understood. So are you saying don't talk about the consumer side or keep that?
We can talk about the consumer, but look, I've given you half an hour, which is unusual. I would normally give you 10 minutes. And in that half an hour, what you have showed me is mostly the consumer business, which means we never would have gotten to the B2B business,
Yeah.
If you don't repurpose the thing is you actually have to repurpose your thinking to becoming a B2B story if you want to raise money.
Okay.
Okay, we can come back. I'm going to need to switch now to a conversation with Cindy. And then if you hang out, we'll hang around. We can talk more a little bit later.
Sure, that would be lovely.
Is Cindy on the call? I think she's on the call, but she's not on video yet. Are we? No? Cindy's not here yet. Okay. Well, there she is. Cindy, could you turn your video on?
Yeah, of course. It wasn't giving me the option to, so now it did. So I think I was just given permission. Thank you.
All right, let me introduce you. Folks, we are going to, normally we have a different order. We have an investor discussion first, then we have mentoring sessions. But today we flipped a bit because of Cindy's availability and timeline. So let's start by welcoming Cindy Padnos, welcoming back Cindy Padnos to 1Mby1M. She's the founder and managing director of Illuminate Ventures and one of the early activists of the female investor in Silicon Valley movement. Today we have a lot more, but she's one of the earlier ones, and we've had her before here, and she's been doing a lot of work in this area for a long time. Welcome, Cindy. Great to see you back.
Thank you. It's wonderful to be here.
So let's catch up. It's been a while. How has your COVID been?
Well, of course, there's not a whole lot that you can say that's positive about COVID, other than it's actually benefited a few of our portfolio companies in ways one could never anticipate. And others have had some hardship because of it, either buildings closing down, and so sales teams aren't working in offices anymore, and things like that have had some impact. Obviously, we're all looking forward to the world, not just our community, but the world opening back up. It'll be, I think, much better appreciated, all of the things that we can do and all of the things we can enjoy in the future.
So let's start with the positives. You said you have had portfolio companies who have benefited from COVID, and we've heard this from many investors that there are certain categories where companies have done well even in COVID times. Let's take a couple of case studies and discuss them. Why, what is it that they're doing, and how has COVID benefited them positively?
Well, probably the most obvious one is Coupang, which is the e-commerce giant of South Korea. And as you can imagine, in the world where shops are closed and people don't want to go out or can't go out, e-commerce picks up pretty dramatically. The credit that I'll give to Coupang is that they were prepared. They were ready to be able to take full advantage of the opportunity that opened up in front of them, which meant they had to have all of the logistics systems in place. They had to hire many more drivers for delivery. They do all their own deliveries. They don't rely on third parties the way Amazon and others do here in the US. And they also had to put in place amazing policies and processes around how to keep employees healthy in the workplace, because we're talking about warehouse workers, picking all of the items for their people that are ordering these online. And then they took the next step and they initiated something they call instant delivery. And what is instant delivery? It means that literally you can go online, order a product up until midnight, and by 7 a.m. the next morning, it's on your doorstep. That's just incredible. And the logistics of doing that are extreme. So they just went public a few weeks ago, had an extraordinary IPO, and what I'm probably most proud of there is two things. One, the reason we're investors in that company, we don't normally invest outside of North America, is that a company that we were investors in merged with them about 6 years ago. And our team, our CEO and his co-founder and two of the other members all picked up and moved to Korea. Our CEO became the CTO of all of Coupang. His co-founder became head of all products there. And they really, they really helped them make the transition from what they were then, which was really more like the Groupon of South Korea, to become the Amazon of South Korea. Without them, it would have been much more of a struggle without the talent that they brought and the skills and the product that they brought with them when that transaction happened.
Very interesting. Were they Americans, or what ethnicity were they to be able to pick up and move to South Korea?
You're saying to yourself, would I do that? No. One of the founders was Chinese, the other was Indian, and both of them, one born in India, the other born in China, but educated here in the US and had built, helped to build several companies here. The CEO had actually been the VP of engineering in the company I founded, which was a very, very early SaaS software company. If you remember, it was a procurement software company. And he had gone on to have a couple of other successful exits. He had been chief product and operations officer at Demand Tech when they went public, and then had left to start this company that was called CalmC, that was a predictive analytics engine for online and cross-channel retailers. And Coupang was their largest customer at the time of the acquisition.
Okay. So that actually brings one question to my mind, which is you generally invest more in the B2B sphere, right?
Correct.
So the company that you had invested in was a B2B company that went in, that got acquired by a B2C company. That's how you got into B2C.
Correct. So you never know, right? You never know. You can't predict these things. And, but we've had other non-consumer companies that have benefited from COVID as well. We have a company up in Vancouver called Allocadia. It's a rather remarkable company in many ways, that the founders had basically bootstrapped the company to over $1 million in recurring revenue. We have been investors there for about 5 years now. They are a ROI management and attribution and marketing planning and budgeting platform that sits in between your ERP system and the plethora of marketing automation tools below that. So a CMO needs to be able to plan and budget. And you can imagine during COVID, every CMO got a message very quickly: cut your budget, cut it by 30%, cut it by 50%. They were massive cuts in marketing that had to be implemented very quickly. And this is a tool that helps you to understand where your best next dollar should be allocated. And it helps every person on the marketing team with that planning and budgeting process as well. So that was, the demand for that product increased pretty significantly. And it won't go away, because people now understand their budgeting and planning for things like marketing has to be much more agile, has to be almost real time. And historically, it was set it and forget it. You set a marketing budget at the first of the year and things don't change that much. Now they change quite a lot and very frequently.
Okay. So let's do a little bit of level setting on the basics of how you're doing your fund right now. What size funds are you working on, and what check sizes are you writing? What stage do you want to come in? You just mentioned that it was a company that already bootstrapped to $1 million. So give us a bit of an idea about what is the investment thesis and the fund strategy right now.
Yeah, so I would say most fundamentally, we are looking for companies that are further along than most. So we do series seed stage investing, meaning we're typically the first institutional round of investment in a company. We generally are writing $1 million check, can be a little bit more, it can be a little bit less. And we're almost always syndicating that investment, meaning sharing it with other like-minded co-investors. So the round sizes are anywhere from, let's say, 2 million to 4 million in size, most typically. And we frequently lead or co-lead those rounds. From time to time, we'll go in when someone else is led, but that's a little bit more unusual. And in terms of the companies themselves that we're looking for, this concept of further along, maybe it helps to just give some examples of what that could be. We have done, for example, several companies that were spin outs from large corporations. One from SanDisk, the chip maker that was being acquired. The company was being acquired, and they said, we don't need these software products. I don't know why SanDisk cared about these, but we don't. And spun out an intact team with a dozen optical engineers, IP, a management team that had worked together for years. And that company now is a company called Jetstream. That's a continuous data protection solution for hybrid cloud environments. They're really the only solution in the Microsoft Azure AVS platform for managing disaster recovery, real-time disaster recovery for VMware environments. So a deep tech company, a really interesting team. And they were looking for spin-out capital, if you will. That's one example. We've done several of those. Other companies, not necessarily was the deep tech. What was interesting, in one, it was a customer base where they were spinning out of a law firm with a legal tech platform, and instantly would have 1,000 customers that were already the clients of that law firm. Okay. We've done companies that have entirely bootstrapped. I don't know if you know Neha Sampat, but she's got a remarkable company called Content Stack. It's in the digital experience management space, and we led her seed round of financing that enabled them to go from 1 million in recurring revenue that they had bootstrapped to over 4 million in less than a year. And then really with just a $2 million financing, they were able to do that, which is rather extraordinary. That's an unusual company. And then Insight Partners came in and led a $30 million Series A in the company about a year later. So she and her team had bootstrapped by having an IT services business and building the same, came to recognize they were building the same product over and over again for customers around the globe, and decided to productize that offering, spin it out, and they sold off their software business to a company, to Software AG, so to a large corporation, and put all the resources behind the productized company when we put our money in. So that's another interesting.
I want to underscore what you just said, which is basically a methodology that we have on our end, productized, which is bootstrapping using services. We do a lot of bootstrapping using services. We have case study after case study of bootstrapping using services. Sure. There are great companies out there that have done very well with bootstrapping using services, Oracle being probably the most known example, but one of my favorite examples is Alteryx, which was bootstrapped with services, and I met their CEO, in 2013, and I'm still, in touch with him, and this is a company that was, a textbook case study of bootstrapping using services. So I'm very happy to hear that as an investor, you acknowledge the importance of bootstrapping using services and how effective it is to build companies like this. By the way, if you want to introduce this company to us, we'll be happy to do a story on them for our Entrepreneur Journey series.
Yeah, be happy to. I'm sure Neha would be happy to. She's brilliant, by the way, and she's also, on top of everything else, on top of being a great entrepreneur and CEO, she's also a level 2 sommelier. So if you're lucky, she'll send you a nice bottle of wine beforehand. So one thing I would say is that most VCs are not interested in companies that start out as services businesses. I want to be clear that the reality is that there are a lot of things that we're interested in that most VCs aren't. We're interested in companies that have used SBIR grants to get further along, meaning no dilution at all, just grants from the government. We also, by the way, recognize in a lot of these bootstrap companies, there may be family members involved. That's another thing. Most VCs, literally most of my friends would say, I wouldn't touch that with a 10-foot pole. And so literally, this. So we've taken a contrarian approach, I guess is what I would say. And we understand the value that can be built without venture capital. But we then believe we have the resources and the know-how and the contacts, the network to help those companies then really accelerate when they're ready to.
Great. And what about geography? What are you doing? Are you doing only Silicon Valley, or is it broader? No. You said Vancouver, so you're not doing just Silicon Valley.
No, we've always had a broader view than that as well. We've had companies in New York, in Philadelphia, in Pittsburgh, in Chicago. We've got 2 in Canada right now, Southern California. So we've always had a broader view. Excuse me. And my partner, Jennifer, is actually in Seattle. So we look pretty deeply into the Pacific Northwest as well.
So, but all North America?
100% North America, yes.
North America, okay. And talk to me a bit about your approach to, female founders. I know you have a different perspective than, just supporting female founders. You actually, if I remember correctly, what your philosophy was that you are not focusing on female founders only. You fund any entrepreneurs.
That's correct. I know I've mentioned a couple here that were female, but Coupon, there were no females there, and many others in our portfolio. What we've done is we've really tried to simply open the door wider. We've tried to avoid the pitfalls, I think, of many investors of having a little bit too much pattern recognition around what a typical entrepreneur should look like. We've built our advisory network, which is an extraordinary group of people from the B2B world. More than half of those members are women. They just happen to be some of the most successful enterprise tech people in the world, people who've been founders of companies that have had billion-dollar exits and the like. And we have also very specifically brought interns in. We have a class year internship program that it's also intentionally diverse, meaning more than half of those students have been women, but 2/3 of them, well, no, but I think it's now 3/4 of them come from diverse Black backgrounds. In our portfolio today, nearly half of our companies do have a woman co-founder, but half don't. And but 3/4 of them have at least one co-founder who was born outside of North America, by the way. And we have multiple Latino founder CEOs. We have multiple gay founder CEOs. We have a level of diversity that we're really proud of, but we don't ever use that as part of our investing criteria.
Okay. Talk to me about what your analysis of the current market is going forward. What do you want to invest in? What trends are you trying to, get behind?
Yeah. Well, one of the most obvious areas of disruption over the last year has been, the work environment. So the category that a lot of people are calling the future of work. We go deeper than that, much deeper than that, and we do each year what we call sector assessments across about 12 or so different categories that we're interested in. They're not always technology. So we care about things like changes in business models, where one of our companies, for example, PEX, is doing a revenue share model. So they're not all SaaS software companies any longer. We also care a lot about the use cases that these companies are targeting. And so that can shift pretty rapidly when suddenly a company says, well, I can serve not only white collar workers, but blue collar industrial workers as well. Or I'm going to focus there exclusively. So those are areas we're interested in. We're very well aware of the need for better compliance around regulatory issues, but also just the whole concept of more transparency. People are looking for it in every way you can imagine, including, the category that people are now calling understandable AI. And we're looking at a company right now that, by the way, the company started in Turkey, but now has its headquarters, it's a Delaware C corporation today, but will always have a large portion of their, employee base in Turkey, I'm sure. So it's really a variety of different areas. We're looking at things that impact the blue collar workforce. We're looking at technologies in the low code area, and certainly business applications that are going to enable omni-channel delivery of content, like Content Stack does, and other things like that.
Cindy, one of the areas that I'm watching very closely, and I don't know if you've read some of my writings, I've been writing about this for at least a year or more in recent times, is platform as a service. I have had lots of conversation with lots of companies that are either already doing platform as a service strategies or are trying to do platform as a service strategies. So this is basically the classic Salesforce.com model, where they started with a SaaS application, CRM, and then open up their platform for developers to build other applications around, and then they created the App Exchange marketplace to sell through. This is a model that is being replicated by several players. Atlassian has done a nice job of it.
ServiceNow is
We
doing
also
the same thing.
ServiceNow is doing it, but ServiceNow is not, I've had extensive conversations actually with ServiceNow. ServiceNow is not really emphasizing the startup ISV world as their developer base. They are opening up as a path, but they want the large companies to build on it and the IT departments of large companies and the system integrators to build on it, like the
That's right.
Accentures of the world.
It's a different twist. That's right. Yeah. So the gentleman who ran that used to run the App Exchange and is as a member of our advisory board. He's left there and gone to Google to do the same thing at Google. So it'll be interesting to see what that looks like.
Avanish,
Yes, of course. Yeah, Avanish.
I know Avanish very well. Unfortunately, Google is doing exactly the same thing. Google is also going after the large workloads and not doing the fast strategy that Avanish was hoping they were going to do.
It's not surprising, is it? That's who they should go after. If you're Google, that makes sense.
Right, but I think from our point of view, from people who work in the startup ecosystem point of view, I think what is not Google therefore is not as relevant to us. For example, a DigitalOcean is really focused on startups. They have 5 million developers, out of which 30 to 40,000 of their developer network is small ISVs, and that's a company that is really nurturing the developer ecosystems around ISVs and startups. Snowflake has about 45,000 developers, and I think they have at least 1,000, if not maybe 3,000 startups ISVs.
And obviously, Roblox is another example, right? Roblox is a perfect example in a different category, but it's the same example. And then there's all sorts of interesting groups like Pegasystems and others that are doing. They're different variations of that concept as well.
Right. So my question to you is, I guess two questions. One is, are you seeing companies built on other people's stacks, like Viva that came on top of Salesforce.com and really bootstrapped the company? Viva was built with such a capital efficient model. It's mind-boggling. I'm a huge fan of Peter Gassner. But so that's one. And then the second thing is, what about companies that are actually thinking fast right away, where maybe they're going to market to begin with an app, with a SaaS app, but then they're thinking that they will go to PaaS right from the beginning strategically?
Yeah, I don't see too many people doing that. I think what some of these other large corporations have as an advantage is that the kind of solution, the platform you're describing, tends to be easier to build if you already have an existing customer base to attract people. So if you think about Salesforce, I was an investor for 10 years and I sat on their board, and they did build a version of their product on that stack, and then frankly had to replace it because it just didn't have the flexibility that they needed. But they were always part of the App Exchange anyway. Why? Because, and obviously tightly integrated with Salesforce. Why? Because of that customer base that would attract to them, right? So, and the same thing, you think of ServiceNow, similarly, they have a very large customer base. Google has a very large customer base, but that they could use that way. They're not, but they could. So it's a little bit of a chicken and an egg issue. If you look at Roblox, that was not an overnight success. That was also a very long time building that company. And it's only in recent years that people have recognized the real value of that business. Literally, probably only within the last 3 or 4 years. But it's been around for at least 10 years. So,
but I think I would say that the awareness about PaaS and the interest in building PaaS strategies is rising. People are using APIs to build their developer ecosystems. Like if you look at Zendesk, for instance, or HubSpot. Actually, Avanish is on the board of HubSpot.
That's right.
Shopify. Many of them are doing API strategies and trying to bring together a lot of developers around their API, and by giving access, to your point, by giving access to their customer base to these developers. So,
Right.
so there's a lot more going on.
Yeah. I think, it's another trend. I think it's an interesting one. But again, I think if you look at it and say HubSpot, wow, fantastic customer base that they've built that now these developers have access to. So again, I think there's a little bit of a chicken and egg, which one do you do first?
Yeah, in some cases, it's the customer base. In some cases, it also could be unique technology, right? In Snowflake's case, I think, a lot of the AI companies, AI startups need a data lake to build on top of. And they're benefiting from the fact that they have a unique technology, which people need. You can't really build that kind of a data lake as a startup and have any chance of getting anywhere without somebody else's technology. And they're well positioned. And several others, MongoDB and so forth, are playing that game.
Yeah.
All right, very good. Any other thoughts before we switch?
No, I think it's a great time to be an entrepreneur. If I was
Always
not
a great time to be an entrepreneur.
Well, I think sometimes are better than others, and I think this is, we invested in BrightEdge and Exactly and some others during a financial downturn, and those are some of the most successful companies in our portfolio. The founders understood the value of a dollar, but more than anything, they really fine-tuned their product and their message with a group of customers who were unbelievably loyal because they delivered something they really needed at a time when everyone was going through difficult times. And, customer appreciation is real. It doesn't go away overnight. And so I think if you have the opportunity to build some of those relationships today, they can be meaningful for the next 10 years.
Absolutely. Thank you, Cindy, for coming back, and we'll keep in touch.
Absolutely. Bye-bye.
Folks, if you like what we do here, refer 1M to other serious entrepreneurs. The word serious is in bold because it's a lot of work to build a company. It's not something that you can fudge. I'll give you a quick few notes about how to use 1M1M, and then we can go back to Q&A, and I will also show you something else. Since we were on the topic of art earlier, I will show you something else. All our resources are at 1M1M.com. You will find a terrific blog series that is free and that lots of entrepreneurs have used for many, many years to learn the nuances of entrepreneurship. And the book series, Entrepreneur Journeys, based on our blog actually, with about 12 to 16 case studies per book, also is good learning material. These free roundtables happen every week, 525 roundtables next week. Our full acceleration program is 1M1M Premium. And you can get extensive methodology guidance. You have a full digital curriculum to access, to learn from. We give you similar strategy consulting as this kind of format over WebEx calls in private roundtables for our premium members, and they're available every week. You can come back as many times as you want. In these free roundtables, you can dialogue only once, but in the private roundtables, you can come as many times as you want to discuss. We do help you with financing. We have a very large network of over 500 investors that we work with closely, whom we bring on here to dialogue with the community, but also we constantly refer deals to, and they invest in our companies. And we have a lot of clout in the media to establish media relations for you. Go to the website, go to self-assessment. The investor due diligence questions are there. You're going to need to answer these questions and, be ready before you go up in front of investors. Our bootstrapping course is a very good starting point to understand the 1M1M philosophy and get a flavor of how we work. It's on the blog, pinned to the top. It'll take you about an hour to finish. And 1M1M Basic is $99 a month. That's our curriculum-only option. It's especially if you're doing the self-assessment and getting stuck on certain questions. Going through the curriculum is a very easy and efficient way to plug those gaps, knowledge gaps. Otherwise, dig around on the website, understand what to expect from premium, what to expect from basic, FAQs, video FAQs, understand how the curriculum is presented. And we are a case study-based program. You are getting an opportunity to stand on the shoulders of other people who've done it before, and that's very helpful. Our investor introductions policies are clearly laid out also on the website. Please do understand those before signing on to the program. Our methodology is bootstrap first, raise money later. And we have very definitive structures of bootstrapping that we have created over time, which help you get to the point where you become fundable. That's pretty much it. We have roundtables every week. We have one more in March, and then actually today is the one in March, and then we have 5 more in April. And then we can go to more Q&A, but I want to show you one thing first before we go. Maureen, could you share the recent piece that I wrote last year, Startup Ideas for the Post-COVID World, Artists and Collectors Shift Online? We had a long conversation with Aditya earlier about digital art and non-fungible tokens. So this one, the one that I'm going to share with you now, is one of my ideas about physical art, not digital art, but it has a blockchain element to it to prevent fraud. Fraud is a big problem in the art collection world. So here we go. The COVID-19 pandemic has changed consumer behavior in a major way. The change, however, has only started. As we move through the virus era over the next 2 years without treatment and without vaccines, that's no longer the case. We have vaccines now. Much more will likely change. This was written earlier last year. As you know, I have a special interest in art and have observed its dynamics for many years. I have concluded that the time has come for artists and collectors to move online and interact in a fluid marketplace. Let me explain. Today, only a small percentage of talented artists have enough marketing skills to find gallery representation to reach collectors. And collectors, if they want to sell what they own to other collectors, have to go through auction houses with stringent barriers. Galleries and auction houses operate as gatekeepers of the ethereal art world, making the art market extremely difficult to navigate for most artists. Recently, due to the pandemic, galleries have been shut. Artists and collectors have started exploring online channels. Strife introduces possibilities. I started thinking about what the online world, art world, would look like in an ideal scenario. Not only should we design a solution that addresses in-person functions seamlessly moving online, but we should also think about possibilities a digital solution might offer that are not viable in a physical world. Let us start with collectors. One of the cherished aspects of collecting art is to have an ongoing relationship with living artists, to go to their exhibitions, to discover new work by a beloved artist, to commission work, to host salons, dinner parties, and other social events celebrating art and artists, to lend the works of specific artists for retrospective exhibitions, and to be able to buy and sell art from and to other collectors of that same artist. And what about the artists? Artists need collectors. Artists need to exhibit. Each of the above represents a feature of an online art marketplace for collectors and artists. Where do we begin? If I were to build such a marketplace, I would first go interview 500 collectors who are interested in living artists, especially the lesser-known ones. Those who collect Picassos and Rothkos today won't do so online, and they're well served by the galleries who represent those estates. But think about Gertrude Stein in Paris in the 1920s. She discovered Picasso. She discovered Matisse. I would also ask what they wish for from an online marketplace. Would they like to showcase their collections in a digital gallery, for example? Perhaps a blockchain-based authentication for each piece of original art they own, connecting with those 12 other collectors of their beloved artist's work, inviting their favorite artists to the platform for ongoing interaction, digital exhibitions, transactions, so on. And then the vital question, how much are they willing to pay for such a service? How about $100 a month subscription fee? If 500 art collectors are willing to pay $100 a month, we have a secure revenue stream of $600,000 annual recurring revenue worked out. Of course, this is just a beginning. The goal would be to bring on board 10,000 such collectors, moving the ARR up to $12 million. Do we charge the artists? The answer is yes. On the other side of this two-sided marketplace are the artists, and they have a different set of requirements. They need to showcase their work to the right collectors, put together digital exhibitions, manage their portfolios, keep track of which collector has acquired what piece, manage payments, packaging, shipping, authentication, etc. My guess is that artists would be happy to pay a similar amount, say $99 a month, to manage their online sales. So if the marketplace curates 10,000 high-quality artists, potentially there is another 12 million ARR in subscription fees. What about transaction charges and marketplace commissions? The good news is that the art world is used to paying commissions to galleries. Commissions range between 30 to 50%. Let us say this marketplace settles on a 35% commission on sales. There would be two kinds of sales happening. One, artists selling new works to collectors, and two, collectors selling pre-owned works to other collectors. This fluidity of art appreciating in value and changing hands in a secure marketplace that also authenticates each piece with no chance of fraud, a common occurrence, I believe would create immense value for collectors. If each collector transacts $100,000 worth of pieces in new and pre-owned works a year, that would generate $35,000 in commissions for the marketplace. Across 10,000 collectors, we're looking at $350 million in annual commissions. Of course, it would take 10 plus years to build up to that level of activity, but once there, this platform would change the art world forever. What about the galleries? Galleries need to benefit from this fluid marketplace rather than getting sidelined and disintermediated. Just like artists can set up their own presence on the platform, galleries that represent multiple artists should also be able to do so. They would gain access to large numbers of collectors worldwide through the marketplace, thus making their participation in this ecosystem worthwhile. Authentication is also an important draw because of the widespread fraud in the business. Galleries would be required to pay a higher subscription fee and split the commission with the marketplace. Let us assume 1,000 galleries participate in the marketplace paying $1,000 a month. That adds up to another 12 million annual recurring revenue. The transaction commission will remain at 35%, but is now split between the gallery 15% and the marketplace 20%. What about the service providers? The art world has an entire suite of service providers like art consultants, interior decorators, and so on, who need to be incentivized to also function effectively within this ecosystem for it to scale. I believe that they can be. This is a winner-takes-it-all idea. The idea that I've discussed here is a unicorn idea. It has the potential of becoming a highly valued company that would achieve $1 billion plus valuation. It is also a winner-takes-it-all idea. Whoever wins will control the market as a monopoly. I hope an entrepreneur steps up and makes it happen. So I'll give you a pointer to a framework that I wrote about a long time ago. It's my framework for Web 3.0, defining it as a rich, integrated experience that combines content, community, commerce, vertical search, and personalization in context. This handy, nerdy formula that I use for this is Web 3.0 equals 4C plus P plus CS. 4 C's are context, content, community, and commerce. C is personalization, VS is vertical search. I believe that you would find it useful to refer to my body of writings on Web 3.0 over the past decade and more as you design such a marketplace. And if you want to work on one of these ideas and are looking for mentoring, please start going through our free bootstrapping course, especially the bootstrapping with a paycheck module, and come to our free public roundtables. We will help you navigate these waters. So Aditya, the reason I wanted to cover that in this session is because you have discussed digital art and digital art exchange marketplace, NFTs in a comprehensive way. I'm giving you a perspective of what that looks like for the physical world and the world of art collectors collecting physical art. So open for Q&A if anybody has any questions. Aditya, you included. If you have any other questions, happy to discuss. Anybody? While you are figuring all that out, let me introduce you to Irina Patterson on our team. If you have questions about the 1Mby1M program, Irina will help you. All right. Anybody? Questions? Comments?
Can I ask the question?
Yes, go ahead.
Right. So this is amazing, Shramana. You pretty much like laid out the entire plan for what could be something huge. And yeah, it's actually very interesting how it's aligned to what we're trying to build with Art&Found, because in the 4 years that we've been in operation, we've actually worked, with artists who are lesser known artists and bring them into the limelight and connecting them with not only collectors but also galleries, because galleries kind of skipped the whole e-commerce space, and now they want to move into the leverage the NFT space to reach wider scale. And I think this on our buyer side, we work with art consultants and interior designers and decorators and architects, and I think there's a huge scope also once brands get involved, because brands leveraging art and design to create digital assets is a very fast growing.
I think it's a different business. Digital art and physical art are very different businesses with very different needs. So the reason I want you to pay attention to what I've written here and what I just shared with you is you kind of need to frame it in a way that your story has scalability built in.
Right.
Otherwise you will not be able to attract investors. You can build a business. You have built a business. You can continue to build a bootstrap business with I guess you have a little bit of financing, but to be able to attract serious money to build something much larger scale, you're going to have to show scalability, and that's what's missing from your pitch right now.
Understood.
All right. So we are going to wrap up for today. I will look forward to seeing all of you next time. Bye, everybody. Thank you for coming. Good luck.
Thank you.